really interesting quote from last week's Economist. It says that if we chop the expenses by a third of banks around the world, that's just the listed banks, that would be $80 per person for every man, woman, and child on the planet, right? And so one of the fundamental things here is legacy banks spend a huge amount of money just keeping the lights on. And so if we could just chop their expenses, that would transform the planet in that one area alone. And that's a bit of a theme that you'll see going through. I think some other things that are going on that are pretty interesting is correspondent banking de-risking, particularly after a lot of money laundering, has actually added risk into other areas of the ecosystem, which has actually made things like liquidity and cash management much more difficult, not only for enterprises, but also for financial institutions, which was a big surprise to me. And then when we designed our solution initially, the plan was we go to banks and we'd sell it to banks and banks would provide it to their clients. And we'll end up speaking to some of the biggest enterprises in the world that actually do this for a living. One of them does $2 trillion a day in global transaction banking. And it turns out they don't know where all of their money is on any given point of time. And they're like, well, can we use your platform to find out where all of our cash is and what currency it's in? And that was super alarming to me, but it's amazing that we can actually help a firm like that. And the thing that came out of this is with this, banks today often struggle to conform to some of the existing regulations from BIS. So what I'm going to talk about is the liquidity component of cash management. We absolutely are in the payment component of cash management as well, but the primary focus certainly today is to talk about the liquidity management. And so, everyone in Treasury is clearly involved in those three, but the liquidity bit is the most interesting for us for today's discussion. So what do we mean by that? Virtual accounts have been around for a long time. They're on legacy systems. They aren't like a real separate bank account. In a virtual account management platform, you really can do that. So we do obviously have the zero balance accounts, target balancing accounts, the notional pooling, the netting, things that are traditionally super complicated to do, like you have to change your interest rate for an intercompany loan to make sure that you're paying the right amount of tax between different entities on a fairly frequent basis. And if that gets out of date, then you get in doggy doo-doo with the CRA or whoever the tax authority is. And it's a pretty complicated thing to do. And if you have multiple banks, you have to go into those multiple banks. They need signing authority. It sometimes takes up to a week to make a small change, like changing an interest rate on an intercompany loan. What our platform does is allow you to do all of these things, and importantly, self-serve. So the legacy way of doing liquidity and cash management from a bank's perspective is really a lot of work. But it's not only a lot of work for the enterprises or the corporates, as they're normally called by banks, but it's also a lot of work for the banks. So we can solve a lot of these things. So you can literally go online, and you could take your entire chart of accounts if you wanted and replicate all of those into individual virtual accounts. So think about that. Instead of having a single bank account that all of your funds go in and out of at any country level, and that very rarely happens, you always have to map it afterwards, and you've got this painstaking effort to do the reconciliation between bank and accounting. And a lot of that is driven from the fact that there's very little integration at a lower level and very little straight-through processing. For an enterprise client, this is obviously a huge problem because if you are based in some random place, you go to the local bank, and we heard yesterday, in Silicon Valley, just down the road, there are 2 branches of Credit Agricole, and if you're in that business, then you bank with them. But you're unlikely to find those branches in other parts of the world that are not doing that same thing, and therefore you land up going with another bank. So you land up with multiple different banks. So to do some pretty basic things like moving money around is extraordinarily difficult. We had one client that we spoke to, and they said they had $10 billion in cash. And I said, that's fantastic. How much can you get today? And they said $1.3 billion. And I'm like, how long to get the rest of the $10 billion into one currency right away? And they said, well, that would take weeks. and they're not even sure they could do it. So the beautiful thing here is that by putting everything onto a consistent ledger, we can transform this. And then the last thing is on the forecasting and analytics. So the way we think about this, these are all done by different components within Treasury. Some of this is provided by your bank, but it's only for their bank. Some of this is provided by Treasury management solutions, which are usually installed on-premise and are not directly connected to your bank. And maybe they are connected to one bank, but not to all your banks. And so the opportunity here is for your main bank to provide a solution across all of your bank accounts globally and be able to move funds around, initiate the payments, and do everything from one place. And we sell a solution that is a white label solution to banks to provide this. So a little look on the the overall dashboard interface. I think one of the key things here is that from this dashboard, you can move funds from any bank to any bank, from any currency to any currency. In one of our clients' situations, who happens to be a very large global financial institution, who also happens to be a big investor in us, they are, instead of sending all of their payments over wires, which is what they do with all of their trades today, they're putting everything on our ledger. We can save them per day liquidity of around $50 billion a day. Per day liquidity, cash, that they can get their hands on, $50 billion. I can't talk much more about that, but it's incredibly exciting on where it can go from there, because on top of that, they can also take out all the currency risk. So at the moment, someone does a trade, and then they hedge that they hedge the currency related to a trade, and then someone else does another trade, and they hedge the currency in the other way, and everyone doesn't really care about the overall global view. With this platform, you don't have to hedge any of the trades. You understand what your total exposure is, and you do one hedge in real time, which you can change all the time to make sure that you don't have any of those currency risks anymore. One of our other clients does this mainly for a living, and I already mentioned they do $2 trillion a day in transactions. They have 22 internal systems that are not connected. They have had multiple money laundering related fines because those systems are not connected, and they didn't realize that some of their participants were sending funds between themselves because they were using two different systems to send and receive within the same bank. And there was a multi-billion-dollar fine. So, if they just invested a mere 100 million in our platform, they would have solved billions. No, our platform does not cost 100 million. But you see where I'm going, that there are a lot of places where it's not worth leaving the money there for any period of time, and it's not worth knowing what your clients are doing. So this is actually fantastic for your end clients, but it's also great for banks and de-risking banks. So a little bit on VAM. We literally have a graphical user interface where you can create these and drag them and drop them and change the relationships between all of your account within the VAM environment. All of these can look and feel exactly like a bank account. So when you're sending money or receiving money into it, it looks exactly like a bank account, except it's going into a real bank account that is unseen to the end users and the participants. So from the end user perspective, they know they're sending funds to a bank account and it all checks out, but you could actually change that bank account in real time and connect it into another entity and those sorts of things. Super flexible. And the great thing is banks don't have to do anything. Provide the platform to your clients, let them take care of this. I think, this is transformative for banks. And at the moment, it's a very frustrating process. But also, at the moment, it's limited to only one bank at a time. Whereas on this platform, and with open banking, which I'll get into more in a few minutes, you can fundamentally change that relationship, because you can initiate a payment from our platform as if you logged into your local bank on another bank somewhere else in the world. And I think this is a huge opportunity for Canadian banks. So Canadian banks who bank enterprises that have clients that are global and already have open banking in those countries could deploy our platform and initiate payments in any open banking territory. That's great for the end users, for the enterprise or corporate treasurers, but it's also fantastic for the banks. because no longer are you competing for the bank business in countries abroad. You can still have them in the home base and get a piece of the pie everywhere else. And it looks like a seamless dashboard right across. So you get the benefits of a locally deployed transaction treasury management solution, as well as the benefits of global access and payment initiation from a single platform that's branded by your bank that you already trust. Make sense? I think if we look at technology companies, most technology companies are really focused on enterprise level stuff. Bank solutions are pretty archaic and don't really provide much functionality. I'll tell you a crazy story for us. So when I first started this business, we were moving money between different accounts within the same company. And at first, I couldn't even do that online until I got some limited cash management functionality, because you have to be a fairly big business before you can even afford cash management solutions. So what I'd do is I'd go into the branch and I'd say, can you move money from this account to this account? So they said that'd be no problem and it would magically happen and we were all good. And then after our first investor came in, we did an audit. And when we did the audit, the auditors came back and they said, where is all the money? And I'm like, what are you talking about? And they said, nearly $1 million has been withdrawn in cash. And I said, I've never even used the card, never withdrawn any cash at all. I don't know what you're talking about. That's craziness. What my local bank was doing was they were doing cash out, cash into the other account. So from an accounts perspective, it looked like I was literally taking hundreds of thousands of dollars at a time in cash out and putting 100,000 in from, like I'd walk into the bank and put cash on the table. I mean, that's bizarre. That's crazy. And there was no link between the actual transactions, because there were two separate transactions that were not linked in the bank's platform at all. Right? So eventually, when I worked out what had really gone on, the auditors weren't quite so upset. And we proceeded. But it's bizarre what the situations you can get yourself in there. The largest financial institutions have developed most of their solutions in-house. And we've spoken to a lot of them, and none of them can do even a fraction of what we can do today. But they are entrenched and they're linking multiple systems. So we are not focused on selling to any of those institutions, although we do have one that ironically wants to use it for their cash management. And then there are the TMS providers. And the TMS providers, a lot of them have fantastic solutions, but a lot of them are on-premise. And as the whole ecosystem moves to the cloud, there's going to be a difficult transition. A lot of them are also not necessarily connected to anything, particularly not a bank account. And in the small business space, a great example of how disconnected this is QuickBooks has like 11 million accounts. So there are 11 million users of QuickBooks. 1.5 million of them are online. The other 11 million cannot actually connect to anything and do anything. They're literally installed on an old PC somewhere that is fundamentally useless from a cash management perspective. So the way we go to market is we go to market with banks. We partner with banks and we give them a solution. It's a SaaS solution. Don't even have to install it on premise if you don't want. You can do it all in the cloud. We do it in many different countries. We do it in Amazon. And I think we've certainly got some great competitors in that space that are doing some really interesting things. We can actually help some of the big banks that have got some interesting solutions there. And the way we see it from a TMS perspective, there's a good opportunity for us to partner with them. But we're going to banks, not directly to enterprises with our solution. So this is courtesy of a presentation that maybe everyone saw earlier today. And I figured I could steal them because I had the photographs. And he did use the term frictionless like 5 times, and we have the trademark on frictionless. So I figure it's reasonable to use his content in my presentation. So this is alarming to me that small businesses, 50% of them don't have a consistent income. And then at the same time, 50% of them have missed a payment. This is basic cash management, and a lot of that can be solved. with all kinds of very, very simple solutions. So I've heard horror stories of people that have got a certified check from a new investor, or young guys have got a certified check from their father even, and put the money in to make payroll, and it takes so long to clear the check that payroll's missed, right? And believe you me, if you're a young, small company and you miss payroll, you have no employees the next day. Like, no one will turn up ever again if you miss payroll. And that sort of thing happens all the time. And so there's a huge opportunity to provide very basic and easy cash management solutions here for the small business. And small businesses are different. So large enterprises have a problem that they've got too much money stuck in all corners around the world. Great example, Apple. Apple wanted to donate $1 billion to retraining people. So you would think they would just wire the money, right? Well, they didn't have $1 billion in the US. So they had to borrow the money to donate the $1 billion, even though they had over $200 billion in cash around the world, right? And the global ecosystem is changing here because the big guys like Apple and like Google want to leave all of their money in country to be the most tax efficient they possibly can, right? At the same time, most banks don't want their sort of volume of deposits because those deposits go in and out so quickly, it messes with all of your BIS requirements, right? So you don't want someone turning up and giving you a few billion dollars with no notice because it's going to mess up all of your ratios. So most banks say no to that. So this is a much better opportunity to have guys like that be able to go directly to money markets and take liquidity directly from our platform and put the funds into their money markets. So we're working with a partner in Europe to allow that as an extension of our platform, and then they can self-manage a lot of those solutions. The problems for small business are the exact opposite. They have so little and poor cash flow that they need to repatriate every single transaction as soon as possible, in real time if possible. And they don't really even care about the rate. They don't care about the tax implications. They just need the money and they need it now. So ironically for them, what they really need is something that's going to say, well, I just want to get the money back really quickly. And so there's I believe today they're not served at all. It's not served at all. It's basically a mechanical, manual process for all of those small businesses. The small businesses that turn up with checks still and try to deposit checks. And a few weeks ago, I was in Europe and I was discussing checks with a person that spent 15 years in payments at a European bank. And I said, so how many checks do you guys get? And he said, I've never, ever seen a check. As long as I've been working, I've never seen a check. 15 years, no check. So I thought that was a bit extreme, but that's really interesting. But there are people that turn up with checks all around the world, and they usually originate in North America, and Europeans don't even know what to do with them, right? So imagine you're a small business, you've got a check, you're trying to deposit it, you just can't do anything with it. And then we also have the other problems of, there's a whole credit card industry that's grown up. I've forgotten the name of the company, but it was two Brazilian founders that went to an accelerator in California. I'll think of it in a second. And they got $100,000 up front to spend, except they had no way of spending the money because no one would give them a credit card. So they'd be given this money of $100,000, and they couldn't spend the money even to buy any service. No one would give them a credit card, and if you're a startup, you need to buy everything with a credit card, right? Because today there's no other way of paying. So they started a credit card company. In the first 6 months, they gave away $200 million in cash back. So in 6 months. So they're crushing it. All they do is they will give you a credit in line with what your bank balance is. So they give you 20% of your bank balance. Done. Simple as that. They do nothing else. They do basic KYC and AML. They say, we'll give you a credit card, and here you go. They've blown the lights out. So small businesses are really underserved. And then I think the biggest thing is that the rich data. So with the global investment bank they're working with, they do a lot of trades. A lot of the time they are trying to match the trades with wires that have come in or gone out. And it's a very laborious process. The DTCC every day has around 10,000 transactions where they don't know what the money is from or for. And then they literally have to send out emails saying, does anyone know what this is for? I know lots of investment banks here in Canada where they have a daily email of all the unaccounted for incoming payments, where they send an email to the whole firm and say, does anyone know what this money that we received is for? All right? So just simply connecting in your platforms of your accounting platform and into the payment systems through our liquidity management solution gives you that straight-through processing. And at the moment, our platform can do about 50,000 transactions per second. So I think that would probably cover all of North America pretty comfortably. If every single transaction came through our platform, we could handle that. We could certainly handle all of the trades. I mean, even the DTCC in the US, they do around 3,000 transactions per second total, and that's all of the trades in the US. So that's pretty pedestrian. It'd be easy for us to handle. On the technology side, I think in the old days, you'd have all these manual integrations, which in some ways were really good for banks because it got to allow you to differentiate yourself. Because once you had taken the time to integrate into your client systems, into their ERPs and that, it was difficult to lose that client because they were dependent on you. I think in an open banking world, that all disappears. It goes away overnight, which leads me to my last thing. So also in that Economist, really interesting numbers in it. One of the numbers that they gave was that there is $7 trillion in listed banks in core capital. They also said that there's 100 trillion in assets. So if we do a very rough CAR calculation, assuming that Tier 2 capital nets itself out across all of the banks in the world, that gives us 7%. Basel II is 8%, and Basel III is 10.5%. Globally, we've got a liquidity problem for banks, right? There's actually it's not working as it is. Part of the problem is there's a couple of trillion sitting in there in correspondent banking, which takes on a number of different risks, including settlement, currency, and credit risk. A lot of that has been brought back, but the AML risk has increased. Second thing is open banking. On the open banking side, being able to do payment initiation on someone else's bank is such a big opportunity for North American banks, because there isn't open banking here, so they can't eat your turf, but you can initiate a payment on ING. So if you've got a single client that's got operations in the Netherlands, you should have a solution, a treasury management solution that allows them to do just that, right? It doesn't make sense for most mid-tier banks to go ahead and build all these proprietary systems when they've already been created. So I think open banking is going to transform things. And then as VAMs transform and become more self-serve, the same things that happened in consumer banking will start to happen in corporate banking, where we can take a lot of the work and give it away to our end clients, and they can actually do it better and faster and easier. But that requires fundamental changes to a lot of systems and core banking systems, and is very difficult for a lot of banks to do. I come from the telecom industry, and one of the amazing things about the telecom industry is every few years there's a new standard, and when a new standard comes out, wipe the slate clean, start over. Bell, which is a network that I proudly built, has got the best network in the world, bar none. It's got the lowest drop calls. I haven't actually personally had a drop call in over 10 years. And that works so well because it's all new tech. Right down from the fiber to the towers, to the sites, to the software, everything is brand new. Everything was built less than 10 years ago. And that's why it works so well. And I think banks have this problem that they're spending 80% of their IT budgets on keeping the lights on for legacy technology. And I think it's not possible to move fast enough in this space. So I think the answer is to partner. And I think we are one of the vendors. There are others out there, but we are one of the vendors that I think can really make a difference. And we're obviously Canadian, despite my accent. I've only got a couple of minutes left, so I was going to open up for questions. No questions? Fantastic. Thank you very much for your time.